everyone. You're tuned in to the Millennial Report.
Now, Brad and I were just talking and trying to figure out where this job hopper title for millennials came from, and if there's really any validity to it that still exists.
It's important, too, that we describe for everybody and define it really exactly what job hopping is considered to be. It's actually defined as if you are leaving a company within 2 years, 1 to 2 years, you were not laid off or you were not fired, and the company didn't shut down.
Yeah.
So it's important to kind of distinguish that. Initial jobless claims are tracking at historic lows year to date, suggesting some stability in the labor market. The 4-week moving average on this has been 251,000. For investors, these jobless claims help measure the strength of the job market. So when fewer people are declaring unemployment benefits, then they're assumed to have jobs, therefore indicating to investors a great deal about the economy. Nearly every job comes with an income that provides or is supposed to provide spending power.
That's how you make it rain.
That's how you make it rain, or in our case right now, kind of make it hail, you know. So it's supposed to give you a little bit of spending power, so which, you know, further contributes back to the economy. So what to look out for this week. On Thursday, jobless claims will be released, which has been up and down over recent weeks.
So historically, millennials have received the blame for the job hopping culture. So according to Gallup's report just past November, How Millennials Want to Work and Live, 6 in 10 millennials are open to a different job opportunity. Only 1 in 2 plan to be with their company a year from now, and 50% say they're considering taking a job with a different company for a raise of 20% or less. Now, job hopping among millennials born between 1980 and 1996 is problematic because these workers currently make up 38% of the U.S. workforce, and we're estimating that they're going to be making up as much as 75% by 2025.
Oh my gosh. Now, can we also throw in the fact that so many millennials, to start their career, were coming out of college with degrees into a hurting job market that didn't post relevant openings until late 2009. When you take that into consideration, with employers adding nearly 200,000 jobs a month since early 2010, that's significant growth, number one. This title of job hopper isn't as accurate when you have a degree in business law or finance or, you know, quantum physics, whatever. But instead, you go into a job at the local coffee shop, which is a story that's all too familiar with our generation. Coffee lovers, don't get me wrong here. I have no issues with baristas or the job title. I'm the guy whose dream job in high school was to work at the local Halloween shop so that I could dance on the corner in one of the costumes. It looked like fun. That was me. But all of this to say, the title of job hopper for a generation where unemployment was at its highest since the Reagan administration isn't an accurate depiction, especially considering companies who were hiring experimented with temp to hire non-benefit approaches due to hiring freezes that were still in place at many companies and organizations that were waiting for their sector to stabilize following this Great Recession.
Absolutely, absolutely, absolutely. And once you get in there with your new position, you have to be engaged with the corporate culture, right? So many businesses have been doing a much better job at rolling out better workplace cultures, but there's still some late adopters out there. According to Gallup, engagement is the heart of the issue of the job hopping as it's perceived. Millennials who are engaged at work are 26% less likely than millennials who aren't engaged to say that they would consider taking a job with a different company, again, for a raise of 20% or less. Engaged millennials are also 64% less likely than active disengaged millennials to say they will switch jobs if the job market improves in the next 12 months. Now, additionally, managers need to be approachable. This is essential, not just for millennials, but for any generation to be able to approach management with interest and more responsibility than changing companies in order to change their roles. I mean, for a lot of these, you know, these millennials that, you know, Gallup polled, rather than talk to their managers about, hey, I think I can take more on or I want to be more challenged, they would actually have preferred, because they didn't feel like their management was approachable, they went to other companies and kind of took a look at other jobs in the market that would expand their roles, but again, at separate companies. It's also important for managers to be approachable so that their employees feel like they can tell them what they do when they're outside of the office, you know, because then that it makes them more related and invested in, you know, what's going on in each other's lives.
I knit when I'm outside of the office. That's all my managers need to know about me. I knit.
Very respectable hobby.
You know,
Very
rugs, all of the things.
You don't knit rugs.
I do. Now, let's stay on roles and job functions for a moment. So earlier this year, we sat down with ADP during an episode of Behind the Bell here on Facebook Live and examined exactly where millennials are going as provided from an executive from ADP. So during that interview, he highlighted that the job sector seeing the most growth among millennials is technology function positions. And even further, millennials are heading to Seattle. What companies are they going to in Seattle, you might ask? Companies like Microsoft, Amazon, Starbucks, Costco, which means for non-government or university-related companies that are in Seattle, 4 of the top 6 employers in Seattle are listed here on Nasdaq.
I was just going to say, they all have something in common.
There's
I can't quite pick it out, you know? And in each of those corporations, I would argue from what I've heard that there's a significant emphasis on work-life balance, right? Certainly what our generation is looking for. We all know this. Work to live, not live to work. Communicating a value for work-life balance is a great way for engendering employee loyalty, because when you think about it, who even has a pension anymore? Nobody I know. Pensions were a huge incentive for keeping employees for the entirety of their careers. Now with 401ks, the incentives are aligned for us to stay at our job either just long enough to get the skills that we need from that job or until we get bored. That's what they did when they transferred the 401ks into taking over pensions. They gave people the choice on whether or not to continue with their pension or move into 401ks, and now they're just taken over.
Have you been guilty of job hopping? And if so, have you gotten an increase in title or an increase in pay perhaps? What made you make that move? So that's our question out to you. My question back to you, Meg, are you guilty of job hopping in your career?
You know, yes.
Okay.
I was, and when I was looking at the Gallup poll and all of the things that they mentioned for what management can do to keep millennials from job hopping, like, you know, valuing the work-life balance, giving their employees a sense of purpose, you know, how they feel they contribute to the larger organization, and then, you know, number 3, being approachable. I wish I'd read this poll before I went in and quit that last job, because I said those things as my reasons in not so many words. It was all those reasons that I left. I mean, those exact reasons. And what's interesting, again, with kind of where the incentives are aligned, where that job hopping is a much more understandable thing to do than it would have been for, you know, a couple of generations or even my parents or my grandparents before me, is, again, not having pensions, right? And so, you know, one of the interesting things about that is the 401ks, yes, they saved money for the corporations at the offset, but what ended up happening is every time you onboard a new employee, that is a huge investment. All right, you have to go out, you have to do the interviews, you bring them in, you do all of the, you know, the administrative stuff to bring them on, and then it's actual training. It's the skills that you need to teach them. And you know, you can teach them those skills, and they can decide to job hop it within 2 years, and your investment in them is gone.
Absolutely.
So I mean, and you know, this is a he hates when I say this, but they cut off their nose to spite their face, and it's just, and now, you know, the loss of that information and, again, the investment in their training is where, you know, they're losing money now.
Right. I agree with you. If I were in a different position as the employee and I wanted to argue that this actually helps the economy, because I have the difficult position of having to take that stance in this particular conversation, here's where I would think it helps the economy if I had to point to anything. Because when you do take that new position somewhere else and you're going there specifically for that raise, that additional income that you're making now is spending power, just as we mentioned earlier. So it allows you to actually contribute back into the economy, perhaps fuel even more employee growth within the smaller businesses that may be operating within your community, or even some of the big retailers, if that's, you know, where a lot of your spending is going towards.
So it's either individual spending power or the corporation's ability to hire more people. We have to decide which one of those is either healthier for the economy, or maybe, you know, we need to find a compromise.